The stock market in the last couple of weeks has been correcting, if that's the right verb, and a lot of the air is out of the so-called bubble. Should people be selling everything and getting out of the market now because the markets are going down, or is this the time to buy?
First of all, I'm not here to give a lot of advice, but I'll give you the following thoughts.
We won't tell anybody. Just give us a...
Okay, just on our own. What's happened is they produced a lot of debt and gave out a lot of money. And so everybody's got money, and it's also very easy to borrow money to buy things. And as a result, if you create much more buying power, then you create goods and services, you've got much more inflation. And the Federal Reserve has been behind the curve, slower to tighten monetary policy. And as a result, we're now starting to see the rise in interest rates to be able to deal with that. As that happens, all assets compete with each other. So now that free money is still going to be cheap money, but it's going to be a bit higher. So interest rates, let's say bond yields, have gone up about 1%. Now you take that and you adjust, everything is the present value of future cash flows, but it means that that interest rate goes up 1%. That means all the other assets have to adjust. We're in a process of making that kind of adjustment. That means the days that we've had before, the easy days where they dump money on you and you don't have much inflation and you don't have much tightness, those are past. And now we're in a different kind of part of the cycle.
How would a U.S. response to a Russian invasion in Ukraine affect markets?
Well, it's increasingly making investors think of what is a war market economy like? How do markets perform in wars? Because they're not used to wars, okay? I don't think it's going to be a big war, but I don't know, I don't know about such things. But it is good to know how the different monies work in that. So I think more attention will be paid to those types of things.